Shares in Nvidia jumped by more than 7% after hours on Thursday after it posted a beat on the top and bottom line in its fourth quarter earnings. The stock has had an impressive start to 2018, rising by 17% since the trough at the end of December. Dan Ives is a managing director for equity research at Wedbush and joins me now. So nice to have you here in the flesh.
Yeah, it's great to be here in the flesh.
So let's talk about Nvidia. We heard about its downgrade to the revenue in terms of the guidance just around a month ago. The CEO said this quarter was actually quite disappointing. So the pop in the shares, is that just a function of lowered expectations?
Yeah, I think lowered expectations. I mean, that stock's really got basically cut in half. And I think part of it, look, that was kind of the darling of semiconductors and to some extent the darling of tech. If you look at the crypto sort of play right there, as well as just what you're seeing, the kind of re-rating of the semi space. But I'd say tech investors, if you take a step back through earnings, really looking at enterprise spend and even what you're seeing on the chip side. And what you've seen so far out of Intel and the likes of Nvidia definitely gives the bulls a feather in the cap.
So what's your view towards the semiconductors in general?
Look, I mean, my view, I think they were overdone in terms of how they were sold off. You know, I think right now the big thing is a lot of it's related to Apple and the iPhone ecosystem. You know, so I do think supply demand has started to level out here. And I think you're starting to see risk aversion now change to a little more appetite for risk. I think tech, you know, continues to see a leg up as well as semis and software. But Nvidia being a bellwether as well as Intel, this is definitely a big step in the right direction for the sector.
So a bellwether in the sense that it's very much exposed to China, I imagine, because there's a lot of concerns about the deceleration economically there, as well as those trade tensions.
Look, China's been an overhang and a black cloud, not just for Nvidia, semi-space we saw with Intel, but you've seen across the board, and obviously Apple's front and center, and that's something where, I think right now when you look in tech, the biggest risk continues to be China, and you've seen throughout earnings that has maybe started to get into the numbers a bit here. And that's why right now it's a fork in the road situation between US and China in terms of, you know, that being removed potentially as a risk. But I think what you're seeing with Nvidia and others is that it's a real risk fundamentally speaking.
What about the inventory overhang for Nvidia? Because this has been one of the key sort of headwinds for the stock in recent weeks and months, particularly amid gaming sales. Do you think that continues in the months ahead? Okay,
I think it continues to be headwinds, and I think that's something you've seen on the gaming side across the space where it's been overhang on the sector. And I think right now there's nothing that would make you think that's going to turn around significantly, although investors, what was the bad news baked in? You know, and I think this is a name as a bellwether that, you know, I think there's a big focus on across the tech space.
So where do you think the shares go next?
Look, I mean, we continue to think overall in terms of the semi space, it seems from everything we're seeing that it continues to go a step higher. You know, we would rather be owning more of the software cloud names than some of the semi names. That's our kind of way to play the sector in tech, because I think from a cyclicality perspective, from multiples, and I think cloud names, specifically names like Microsoft, some of the cybersecurity names like Palo Alto, as well as Zscaler and CyberArk, are, in our opinion, some of the better ways to play some of the next-gen trends than chip names.
So I know when we were speaking before, you were saying that you're more excited about the B2B businesses rather than the B2C space. Does that continue to be the case?
It continues to be the case. I think you want to be overweight names exposed to enterprise, cloud, AI, some of the next-gen trends versus what you're seeing on the consumer side that's seen headwinds, you know, even though you've seen a rebound on some of the social media names. And I think going forward, there's also going to be a surge of M&A, especially on cloud with Amazon, Google Cloud with GCP, I think really starting to get their sea legs, and obviously Microsoft. So I think that's going to be a catalyst for the overall sector.
So the overall sector's had a pretty strong start to the year compared to the last quarter of 2018. Do you expect that positivity to continue?
We do. I mean, look, going into Christmas, I mean, the Uber driver was negative on tech stocks going into the year, and I think you've seen that reverse. I think part of it is the fundamentals have started to give you confidence. We're not seeing really a slowdown in terms of spending environment, and I think you're going to see these stocks re-rate higher. So in our opinion, outside some exogenous events, you know, in terms of U.S., China, if something happened there, you know, we believe that as that black cloud gets removed, government shutdown in the U.S., obviously a rearview mirror issue, I think we really start to potentially see new highs here.
All right, Dan, thank you so much for your time.
Thanks for being here.
That was Dan Ives, Managing Director for Equity Research at Wedbush. Thanks for watching IGTV, and we'll see you very soon.